Welcome to the Captain's Blog. I am David McDonough, the president and founder of Flagship Wealth. On this blog, we try to take what's unnecessarily complicated on Wall Street and make it understandable to you on Main Street. Ended up last week up fractionally, but negative news, negative headlines came out on Friday about you, the consumer. Folks, remember 70% of our economy is driven by you, again, spending in our economy. Well, your consumer confidence dropped the fifth worst in history. Did that negativity bleed into this week? Here's your week in review. We mentioned last week geopolitical risk. Again, with the absence of corporate news, there's a vacuum and headline risk takes over. Well, we've all seen the scenes coming out of Afghanistan. Again, lowers the confidence levels here. Again, with the Delta variant, interest rates spiking, prices going up. You as a consumer are less aggressively spending at this point. Goes into retail sales, again, lower than expectations this week. We also talked about the Fed going on a tapering tour. What do I mean by that? Again, they believe that they're going to have to start tapering their bond purchases quicker than expected. What does that mean to you? Interest rates are going to go up quicker than expected. So the market priced at an all-time high to perfection with all of that negativity. As of this print, down 2% for the week. But remember, folks, it's been over 200 days since the market has given back just 5%. So this is certainly something to be expected. Now here's what to look for next week. So as we've mentioned before, August is typically the second worst month of the year, with September being the worst. Why? At the end of the month, volume dries up, less people working, although the captain will be at the flagship. Geopolitical risk. The world has seen what has happened in Afghanistan. And you know that China, Iran, North Korea are going to start testing us as well. Be proactive in your portfolios, but know this, that when the market priced to perfection, you are going to have pullbacks and excuses to sell off. But you as a long-term investor know that the economy fundamentally sound, and this may give you a great opportunity to buy on weakness. Now here's the personal finance tip of the week. So we use the term asset allocation frequently on this blog. What does it mean? Well, folks, in basic terms, it means diversification of all of your assets. Don't put all of your investments in one sector. Do not chase. Do not be part of that FOMO, that fear of missing out crowd. It's that whack-a-mole game that you see at those carnival folks. Be there before that mole pops up. Have assets invested internationally, domestically, small company, mid company, and get proactive and have active management in your portfolios versus index. Because again, in my opinion, with a market priced at an all-time high, especially US domestic, you need to have your assets diversified. So thanks again for checking in. We'll see you next week on the Captain's Blog.